Kenya's property market is on a rebound following a low interest rate regime that has seen improved earnings for investors in the country's lucrative real estate market. According to the findings of the latest quarterly index by real estate consulting firm Has Consult, Kenya's property market is showing signs of recovery from the harsh interest rates in 2011 and 2012, which had caused a slump in development. Here now, Charles Gitonga reports on how this will come as a welcome relief to those buying, renting or building houses.
For a long time, housing rents have been on an upward trend, a factor that has contributed to the high cost of living. However, the third quarter property index by Has Consult shows that overall rents have grown at the lowest in the last 3 months since 2011 at just 0.4%. This slowdown, they say, is expected to persist and consumers will witness stable rents going forward. At the same time, house asking prices remain static, growing at 3.1% during the quarter compared to the 4.7% realized during the same quarter last year. The prices were strongest for apartments, which rose by 3.6%, followed by detached houses, whose prices were up 3.2%, and those of semi-detached houses rising by 2.4%. Combined easing off comes at a time when investors are witnessing high returns. This is because of high demand as the market recovers from a time lag in new building caused by the high interest rates of 2011 and 2012. The total returns on let properties are now highest for the semi-detached houses at 16%, followed by apartments at 13% and detached houses at 10%.
The average yield on housing bought to rent out was 11%. This represents a high earning investment up against the array of all asset classes in Kenya and in fact globally.
The third quarter of the year has also been characterized by scenes of investors selling off their property to avoid new tax obligations come next year when the capital gains tax will be introduced at 5%. Industry observers, however, say the new levies will not have a long-term effect on the properties market. Charles Gitonga, KTN.